Okay, Brent, we are live. Okay, welcome everybody to Wall Street Reporter's next super stock, a live stream, CEO live chat. We have with us today Logiq, the president, Brent Sun is back. Brent, welcome.
Thanks. Glad to be back, Jack.
Brent, congratulations on the good news today. We see the stock is moving a little bit here. Up about $1. You got the news going with the Indonesia deal, which I think, I think people are kind of finally waking up to it. Maybe that's why the stock is starting to move now. So maybe can you tell our audience why this deal with that you have with the social, what is it? It's the Social Security Administration of Indonesia. You got potentially 48 million customers. Explain to our audience, the significance of this deal and why it's a potentially a game changer for Logiq.
Sure. Okay. I would absolutely agree that most people who follow us or are new to Logiq may not understand the magnitude of the relationship with the Indonesian Social Security Administration. It is a government agency that serves 20% of their entire population. That percentage compared to more developed countries is rather small, but it's nearly 50 million people who have their pensions and benefits and health insurance administered by this government agency. One thing that they've been very keen on over the past 2 years, is being able to provide finance solutions to their existing base of members, plus incentivize new members to join. So when they partnered with us, it was really on the heels of two other deals we announced earlier this year. The first being ShopeePay, which is a division of C Company Limited, which is on the New York Stock Exchange, and has enjoyed a significant run. I think it's up 15x just in the past 14 months alone, ticker SE. But if you look at them and then you look at the other 19 companies that have significant valuations in the region where we operate, the thing that really sets them apart, or has set them apart, is they've got a huge base of users, upwards of, call it 5-10 million users on whatever various products and services they provide. So earlier this year, we had 130,000 customers in Indonesia for our delivery app business, and 35,000 merchants or small businesses. Again, that's 130,000 customers, 35,000 businesses. Okay, so you're not exactly setting the world on fire, but establishing a good foothold there. We signed the partnership with ShopeePay in July. We signed an agreement with Tech Mahindra in August. Tech Mahindra is an Indian tech company listed on the Mumbai Stock Exchange and has about a $7 billion market cap. So those two votes of confidence were significant. But what ended up happening just this past month is the Social Security Administration in Indonesia put up for bid, and we were one of the two candidates bidding for it. We won, and so what does that mean? Okay, it is an exclusive to where they formed a new company specifically to partner with us to serve their 48 million members. 48 million versus, again, we have 130,000. So, just the access to that huge base alone is tremendous. We don't even have, we could aggregate 1% and it would still quadruple the number of users we have now. But their internal forecasts are more like 20 to 30% penetration over the next 18 to 24 months. So, what does that look like? That looks more like, 10 million users. Okay.
So potentially you're going to have 10 to 15 million users in Indonesia on this platform. Okay, so bottom line is you won this government bid. You're going to have potentially 10 to 15 million users. Let's walk through the revenue potential. This is a micro lending platform primarily.
Among other things, the announcement we had today is that we've kicked off the pilot What we're doing from this point forward, phase one is the 6,000 employees of the Social Security Administration. So think of it as an in-house beta test. So we work out all of the functionality and any kinks there might be within this captive base. And then phase two is with a membership group called GARDA that has 5 million members. So we're sequentially ramping up the number of users until we're ready to go full bore on the 48 million members, of which we expect and they expect to aggregate between 10 to 15 million of those members. Now this will be a combination of microloans. They can use our payment platform. Again, we've got 130,000 users now in 35,000 businesses. This gives us access to a total of 48 million plus access to 600,000 businesses that are within their network. So it's substantial.
Okay. So wait, let me ask you this. Okay, so just to confirm, so you're gonna have, so this is gonna roll out basically in 3 phases. You're doing right now the pilot phase, 6,000 members. Then you're gonna do this 5 million members.
Yes.
And then there's going to be the full thing, which is 48 million. Again, that's the total potential thing. And in theory, or they're saying you should get like, what is it, 15, 20, whatever the number is, penetration, because it's not going to be for everybody. So still these are massive numbers, 10, 15 million users. I guess the question is, I'm sure you've probably modeled it or they've modeled it. How much can you generate per user in revenues?
We've now just to frame it properly, we've done some initial calculations, but that is only on the micro lending platform. We haven't layered in the revenue potential from the e-wallet or other value-added services that we'll layer in. But to give you an idea, with as little as 2% penetration and loans being taken out, and these are called micro loans. So the average size is very small. It's $100 at a time, but this is high velocity. So generally you'd see these used anywhere from 6 to 12 times in a year. So think of it as like with a revolving line of credit or even a credit card, where we'll pay off the whole thing every month. The interest rates and this was just re-regulated by the government, are actually 0.8% per day. So if someone took out a $100 loan for a month, you're actually looking at 28%, and that is the new low rate. So although it may sound somewhat usurious, that's actually quite a fair rate. So again, modeling it out with this.
I mean, compared to the alternatives in the space, basically.
Yeah, I mean, there's people out there, they're charging like 50 and 100% fees, and they're getting away with it. And the government re-regulated it and said the maximum per day is 0.8%. So 28% a month is what you can validly charge, and that's backed by the government. So the way we modeled it out, we just took a simplistic approach. We said, okay, 2% penetration of the user base. The member base. $100 at a time. It could be more. Our percentage take of the fees minus the split with our partner. The revenue opportunity just from that, and this is on a worst case basis, comes out to about $5.7 million a year in net revenue, and that's almost all margin. So this year
this is. I mean, again, this is the great thing in the fintech space is it's a very high margin. It's not like you have manufacturing costs, shipping costs. Nothing. It's
and look, again,
that's just your split. That's your net split, basically. You have to split with the government.
Yes, on a 2% penetration rate, it's almost $6 million in net revenue to us. This year we're going to have about $38 million in total revenue. So you put that in perspective, that could be additive by another, call it 15%. But again, we took a worst case scenario. We didn't layer in any other value added services. So, if you want to start to try to, and it's not even blue skying, if you want to try to be a little bit more, a little less conservative, would this track up into the $20-30 million a year net revenue opportunity? Absolutely. And that's not getting aggressive by any stretch. It's just taking a reasonable approach to penetration, a reasonable approach to turnover, and a reasonable approach to how we scale up and add in value-added services.
Okay.
But again, that's not including value-added services. That is only on the microloan side.
Okay. So 25 million potential revenue is not including the additional. It's just the micro lending part.
That's right.
Without layering it. Okay. So in theory, there's other cross-selling opportunities. I mean, you might be doing, I don't know, you could just, increase it by, 2x, 3x. Usually that's the idea, no?
Exactly. Yes.
So, 75 million plus revenues, this could generate, let's say in a couple of years, once this thing has, better market penetration.
Absolutely. And again, it is an exclusive, it is government backed and sponsored. It is with a captive base of members. So they already know what these people make, what their savings are, what their payment ability is. I mean, everything is built into it to, knock on wood, to ensure success. But applying reasonable revenue projections to it, yeah, I think those numbers are achievable. They're by no means, pie in the sky. I think it is very reasonable to attain those types of numbers over a 2-year time frame.
Okay. Let's see if we have any audience questions. Anybody that's joining us could ask away. We'll try to get to your questions. That's the main idea. So let's keep moving. Okay. So basically, let's say you do 25 million additional revenues. So that's based on the peer group comps, and that's kind of what we have to look at is, this could be add 250 million plus to the market cap of Logiq, right? So which essentially, this deal could be worth, potentially just this alone increases the market value, 3x. No, what's the market cap? 100 million.
I think so. That as you well know, and I think most of our viewers who have followed us, we're still trading at around 2.3.
Oh, I'm sorry. Wait. I missed. I didn't include the other part. I didn't include the existing revenue. So basically, let's call it 40 million plus 25. So we're at 60 million, 65 million revenues times 10, 650 million market cap.
That would pencil out. Yes.
We got Jeremy asking, any analyst ratings on your stock? Any analyst coverage right now?
Jeremy, not currently. We have had a number of discussions with analysts just in this past 2 months. I would say it's fair to say we could see analyst coverage pick up. That's usually a function of investment banking. So we do have an investment banker here in the U.S., Benchmark, and without giving away too much, we could be engaging one very quickly in Canada as well for our impending listing there.
Okay, yeah. So basically, so you want to talk about that, because you mentioned potentially a Canadian listing, and what are the plans for Canada? Because we happen to have a lot of Canadian investors in our audience. Half the people who watch the videos on YouTube are from Canada, believe it or not, right now, and they have this great thing there. They have these TFSA accounts where it's like an IRA, but you can take the money out anytime, tax free, no capital gains. So you can make 10x your money in Logiq. You buy at 8, you sell it at 50, and take the money out and buy yourself a Lamborghini and no tax. You like that? So we got to get the stock in Canada. It's great. All right, we got some questions. Sales went down because of COVID. Did your sales?
That's a good question, Andreas. So what we're in the middle of now, and I would encourage you and everyone else to read the transcript of the conference call as well as the 10Q. We're in the middle of a product transition. When we started out 5 years ago, the majority of our customers were through white label partnerships where we were on a revenue share basis with the partners that did all the selling and supporting. It pretty much trapped our gross margins down in the 17% level. So what we've done in Q3 is we started transitioning away from the white label partnerships and integrating a direct sales model where internally we've already seen gross margin improvement up to the 35-40% level. So by eliminating the white label partnerships, we are seeing a decrease in top line, which will start to increase in Q1 of next year. But with that, you'll see higher margins. The other side of our business, Logiq, has sequentially grown through this. We are not in e-commerce where we sell products and services. We're in e-commerce enablement. So we actually provide tools for companies that get online.
Okay. And I think this kind of, you answered Mitch's question. This basically, okay. The question, I guess, in Canada, meaning you're going to be listing in Canada. The shares are going to be available in Canada. Not, I mean, you do have customers in Canada, though, right?
We do.
But if this is, we're talking about specifically about the shares, right? You're going to be on Neo Exchange.
Yeah. Let me put it in perspective without trading on any regulatory guardrails. So when a company from the U.S. seeks to list in Canada, they can do so through an IPO or a direct listing or an RTO where they merge into a public show. We cannot say specifically what we're doing yet until we file with the Ontario securities regulators. Generally, when a company, and I'm speaking generally, when a company seeks to IPO in Canada, they engage an investment bank to lead that IPO. I cannot say that we have engaged an investment bank to lead an IPO, but I can say that we have engaged an investment bank. So, in theory, if we are seeking an IPO, said investment bank would be the sponsor of that. That would be announced upon the filing of the preliminary prospectus in Canada if we go that route. So I hope that's helpful.
Okay. Let's go. We got a question from Kevin asking. You can see the questions on the screen, right, Brent?
I can, yes.
Okay, so he's asking about the Q4 where the Logiq revenue will be inclusive with Fixel. That's the new acquisition you have. Logiq, Pay Logiq. So what will be the indicative contribution from these respective divisions?
Okay, so Q4 will have contribution from Fixel AI. We will be consolidating the Indonesia businesses, Logiq and Pay Logiq, in Q4. So you actually will not see the results until we report in March of next year on the 10K. As far as speaking to what those contributions will be, I cannot say specifically, but what we have targeted for 2021, and we indicated this on the call, we're looking for revenues next year of around 43 to 45 million top line. We're targeting gross margins across the board to be around 35%. The target going into 2022, where you'll really start to see a contribution from the acquisition of Fixel and certainly our Indonesia businesses and potentially several other acquisitions in the pipeline. We're looking at around 67 to 70 million in top line and 40+% gross margins. Now, the illustration that Jack and I were making earlier about a contribution from our new Indonesia business, we haven't factored those in. So could that revenue be significantly higher? When we model it in, I believe so. But those targets are based upon core business, AppLogic, Logiq, Fixel, and then our Indonesia business, Pay Logiq and Logiq.
Okay, let's get to the next question. Okay, so this guy's asking, what's happening with the food delivery business in Indonesia right now and going forward?
That's a good question. Interesting screen name there.
Yeah, I don't know what it means. I don't know if it's a COVID thing, What's
Yeah. No, good question. So, Indonesia and certainly Greater Jakarta, where we operate, the food delivery business has been no different from um, other major markets where COVID has had an effect on going into work. Most of our business has been on the commercial building side, and so we did we did experience a dramatic slowdown on that end. What we ended up doing is back in April, May, retasking our food couriers to sales and going and signing up new merchants, and also going to residential apartment complexes and signing them up as well. So what we're experiencing now as they exit a lockdown, up until this past week, it was 50%. I'm sorry, it's currently 50% of the workforce is able to go into the buildings. For about a month and a half, it was no one could go into their work buildings. But given the split of residential and commercial, when we go fully back online, we think that we'll start to exceed the previous run rate we were at. So there has been an effect, but we've mitigated it. In coming out of the lockdowns, we expect to see much greater volume.
okay? Kevin's asking about M&A. You have any M&A plans?
Inbound or outbound?
It means both, right?
Sure. Well, I'll speak to both. We have not only announced publicly that, or disclosed publicly, that we've been in conversations about companies interested in taking a strategic stake in us. And additionally, if you look at what we've done with Fixel and certainly Data Logic earlier this year, we are very active in M&A on the inbound side. We've met a number of companies that fit the parameters of both accretive and strategic additions to our business. Will we see something before the end of the year? I hope so. Yeah, we work very diligently and aggressively on trying to close things. So I hope so.
Okay. Okay. Porsche is asking about the Neo. What's the timeline? Do we talk about the Neo timeline?
Well, I would like to be up and listed before the end of the year. I guess putting it in context, the process is such where the company undergoes significant background checks by the securities regulators and the exchange. We have been through that. We've already done that. It's completed. The prospectus would be next on a timeline. Parallel to the prospectus, you engage an investment bank to, if they are raising funding on an IPO, to complete the underwriter section. Also decide upon valuation and pricing. There would be a virtual roadshow and marketing, and consequent and simultaneously commentary from the regulators. All of that generally takes about call it 3 to 4 weeks. More recently, so it is very feasible we could get up and listed before the end of the year.
Okay. Yeah. Yes. It's yes. Sometimes these things take a little bit longer. I mean, one of our other companies that we've had, which is now Fubo TV. They were on the OTC when they first, were on our platform back, in July. I mean, they were talking about the IPO, getting on the New York Stock Exchange because they wanted to uplist. They started talking about it in June, July. Or I mean, it took them about 3 months. They raised 100 million plus, whatever. Now the stock is flying. So, but sometimes these things take longer. So just anybody that's why these exchanges, it's sort of there's a lot of stuff happening. So, I mean, it's a question of timing. So like Fubo took them 3 months longer than they expected. So just maybe we should keep expectations we like to be optimistic here. We like to be optimistic, but just
yeah, understood. And if we were starting today, I would agree wholeheartedly with you that we could look at 3 months, but we're not starting today. We've been in the process for about 2.5 months. So,
okay. So, and we were actually talking about it for about a month, right? You mentioned it. So we're, we could be a month, 2 months away, right? Let's keep you. We don't want to get people too hyped up because here's the thing: we have a tremendous Canadian audience, and I think one of the catalysts. Look, I mean, one of the things that we look for with the next super stock program is companies which have multiple catalysts in place that could drive that stock price appreciation. And one of them is, additional sources of demand for the shares, right? And there happen to be a lot of Canadian investors who we know would buy the shares. I mean, because we see them talking about it on forums. And they just, it's more difficult for them. They can't get that TFSA thing. They can't get that tax deal going. So, I think that, and look, it doesn't take a lot to move the stock. I mean, the stock is upward of $1 just on 50,000 shares of volume. I mean, yesterday was down $1 on 160. So it doesn't take a lot to move the shares. I think once you're listed in Canada, I mean, this would be a double. I mean, and also there's the tie-in with the Shopify story where you have that institutional angle. You want to talk about that a little bit, Brent?
Sure. If you look at the trajectory of Shopify over the years, they're headquartered in Canada. I mean, they clearly have a significant Canadian institutional and retail investor base. And I think one of the other big positives is that what it's created in Canada itself is that it's facilitated the listings and upward movement of other tech companies, not only in e-commerce, but in other areas as well. AI, AR, I mean, it's a significant base of technology companies and being enabled by the understanding of how to invest in tech by the Canadian investment community there. So, for us, it was a great way to go. And I just saw a question flash up, which one of the other very interesting facets of listing in Canada is that the NEO has a reciprocal program with other global exchanges, including the NYSE, where they can facilitate or will facilitate a cross listing of companies listed there directly onto the New York Stock Exchange. So in effect, we would uplist from the OTCQX to the NYSE without having to go down the path completely on our own.
Okay, a couple of questions from Adrian. I guess we've got people coming in a little bit late to the live stream, so those questions, just check the replay. That was we touched on that. Now, next question from Adrian is: do you have any other deals in the pipeline that could bring more small to medium businesses and consumers? I guess, Adrian, are you talking about Indonesia or I don't know? It's an open-ended question. So, Brent, take it away.
It's an ongoing process. I mean, over the past 5.5 years since I've been with the company, I mean, it's what we do every day. We would not stop looking for new avenues of business. I think the best answer to that question is that the ShopeePay deal, Mahindra, and then more recently KMSB in Indonesia, that has brought a number of inquiries in on the corporate side and strategic side. We get calls, emails, messages in higher frequency each time we sign one of these partnerships, and I expect that to continue. Onboarding those, same, yeah.
Okay, Brent, I just realized we a lot of times we get new people here, so we start off with the news, but let's kind of give a quick recap. 30-second elevator pitch. For anybody that's watching this for the first time, because we do get a lot of new eyeballs on these things. What does Logiq do? What markets are you in? Revenues? Give us the snapshot. Sure. 30 seconds or less.
30 seconds or less. Okay, we're an e-commerce enabler. That means we provide solutions for businesses to get their business online, or if they're already online, we have data analytics and advertising and marketing technologies, or the buzzwords are ad tech, martech, solutions for them to sell more or sell better. So regional focus, the business is really split into data. Logiq serves developed markets, so US, Canada. Emerging markets is what AppLogic is focused on, and those emerging markets are predominantly in Southeast Asia, so Indonesia, Thailand, Vietnam, Philippines, all very highly populous countries.
And that's, and so here's again the interesting thing for investors is like, this is kind of where, if you look at the stocks that are hot right now, whether you're talking about SE, whether you're talking about Alibaba, these guys are all talking about Southeast Asia, Indonesia, Philippines. This is they're talking about on the conference calls. This is where Alibaba. That's where their big focus is going to be. So I think that we're going to see valuations moving up. They're and there's going to be more sort of investor dollars flowing into these names. So I think it's interesting, because right now Logiq is kind of undiscovered. It's been getting slightly better now. It's taking a little while, and the valuation gap between where the stock is and the peers, which is would be, I mean, if you'd be compared to if you'd be valued like peers, the stock would be I don't know, what is it, $80, 60, whatever the number is, it would be over $50, right? So what I like to say is value gaps close slowly and then all at once. So there's a lot of catalysts in place. Interesting question here from Ramoj. What kind of mitigation do you have if there's going to be another lockdown, coronavirus thing happening in Indonesia, some of your other markets in South Africa?
That is a good question. In terms of regional focus, again, the data logic side of the business that predominantly serves the U.S. In Canada, we've seen sequential growth through COVID, so that's not an area of concern, because those are serving medium to large size e-commerce companies. Companies in the emerging markets, customers in the emerging markets. If there is another lockdown, again, we've transitioned, or we've shifted away from 100% commercial-based deliveries to a blend of residential. We would probably just continue to shift over to more residential. But in either environment, whether there's a lockdown or not, we intend to see business start to tick up again.
Question. How do you see dilution playing out over the next year? Are you planning raising capital? Any potential dilution?
Well, that's a good point. That comes up often. In dilution itself, that is viewed different ways by everyone. As long as the valuation is increasing and you're raising funding at higher levels, there's always an offset. We've through M&A we've had dilution. As our market cap increases, I think that the levels decrease. We acquired Fixel for a $5 million acquisition price, which was all stock. Doing so at a $100 million valuation versus where we were back in July at a $20 million valuation, it's significantly different. So gaining further exposure by listing on the NEO and then cross-listing to the NYSE, I believe that what would come with that is more exposure to institutional investors, consequentially a higher market cap, and raising funding or making acquisitions at a higher level, more than.
I mean, Brent, if you raise. Yeah, I mean, if you raise, you raise $10 million, selling 1 million shares at $10, the next, I don't know, month or so in this Canadian listing, that would be a net positive. I mean, that you could parlay that 10 million into probably 100 million market cap with acquisitions or internal growth, etc.
Absolutely. I think if you look at what we acquired Logiq for back in January, you look at what we acquired Pixel for, and all of this is in the filings, and you do a very cursory amount of research around it, and you start to see how our revenue growth is tracking. You'll see that those acquisitions were accretive. So focusing purely around dilution, just on a concept itself, I think is detrimental. If you weigh in the effect of said acquisitions or what you do with the funding you raise, that tells a better picture.
Okay, Brent, let's wrap up. Two last questions here. The favorites. Everybody wants to know what kind of news flow they can expect. So, what kind of news flow can we expect from Logiq as we head into the last 6 weeks of 2020?
Sure. Without being specific, I would say pay attention to any updates we have on the 3 partnerships in Indonesia right now. Again, ShopeePay, Tech Mahindra, and then KMSB. I would also follow what we're doing as it relates to the listing. And when you see those, you will get a very good idea of what's next.
Okay. And last question. So it's our favorite here, which is your opinion, Brent. Top 3 reasons why investors should consider Logiq stock today.
Doing the due diligence. A big component of that is looking at the composition of management, the board, and customers. And if you go to our website and download our deck, you'll get a good idea. And then on some of the replays that we've done here with Wall Street Reporter, we've shown the slides where the customer composition is comprised of some very large publicly traded companies, Fortune 100 members. You look at our board and our management team. We've got people who were senior executives at IBM, Yahoo, Ubisoft, various other enterprises that carry a lot of weight, and that's extremely important because you want the credibility and validation along those lines. Second one, valuation. Our valuation is significantly discounted in any area we operate in. We're trading. If you look at other e-commerce enablers, they're trading at about 23x revenues right now. We're at 2.3, so there's a big disparity. So how do you get there? You get further market awareness through channels like what we're doing here with Wall Street Reporter and Jack, and also through listing on the senior exchange, research, and then I think the third would probably be look at where we're headed in terms of revenues and gross margin improvement. And as you start to see those track up, it further validates an investment theme that due diligence would lead you to and then confirm you.
Okay. On that note, Brent, great to have you back. And thank you, everybody in our audience today, the live audience, for joining us. We'll see everybody in the next live stream, and hopefully we'll have some good news from Logiq in the next couple of weeks. We're waiting for the Canadian news.
Indeed. Thanks, Jack.
Thank you, everybody.